Good morning, Steve Freed in Chicago with the morning grain comments. Markets are a little bit better overnight. We certainly have seen sharply lower prices early this week in the grains as the markets try to absorb the fact that U.S. parts of the dry areas, South Dakota, Nebraska, Iowa, Missouri, and now down in the northern delta is getting some rains. That could stabilize crops there. Over the next 7 days, we're also going to see some pretty heavy rains across the southern hard red winter wheat belt, amounts maybe as much as 2 to 4 inches of rain, and that rain will go a long way in helping soils going into next year's planting season. We're also seeing some scattered showers across the parts of Europe, which may be helping stabilize conditions there. But again, when you look at Texas and Oklahoma and even parts of western France, the data continues to say that they're in a very strong drought, and these rains are not going to replenish rivers or water levels. And there continues to be extreme weather here in the United States, with record temps in Texas, record temps in the Southwest, and record temps in Oregon. And again, concerned about water shortages in the U.S. Southwest. As far as news, not a lot of new news out in the marketplace. I think a stable crude oil market is going to offer some support to beans and corn. As far as export demand is concerned, we're still concerned about China economy and also some European data today that suggests their economy is slowing. This could force these countries to lower interest rates. In the U.S., we'll also be watching the inflation data as it kind of slowly comes down from the highs in July, but still well above the Fed target, and that's 2%. So they're expected to continue to increase interest rates, which even could slow our economy. The food and fuel inflation part has come down, but other parts continue to go up, especially wages and rents. We also note that the corn market, Brazil corn, is still cheaper than U.S. At one point, there was a premium discount of Brazil as much as $1.30. But when we look at November prices, Brazil is now $1.40 over U.S. So that suggests that down the road we could actually see some increased corn demand, especially out of Europe. In the wheat market, continued a lot of discussion about Black Sea exports. We're starting to see a few vessels ship out of Ukraine, which is a big change from earlier when the vessels were kept from being shipped because of the war. We also note that there's a lot of discussion on how much wheat Russia can actually ship. They have some logistic issues, and we also note that farmers there are not selling. And so the question marks concern, is there insurance for the vessels, and how many vessels will actually put in to load wheat? We also note that when we look at global feed grain stocks numbers, less China, it's almost record low. So even though prices have come down because of better weather, we're still tight. And next year we need big crops, especially starting in South America and then the Northern Hemisphere. So trying to bounce a little bit off of these recent lows in a trading range, just below the market at the lower end of the market should be end user buying of beans, meal, corn, and wheat. As always, these are my thoughts, not those of ADM Investor Services. Have a good trading day.